Okay, let us go for the textbook question. Okay, the question, just a second. The question is on the board. You can take down the question. Let us read the question first. Let us read the question first. From the following information, calculate cash flow from operating activities using direct method. Direct method means straight away whatever operating expenses are there, we will put there. Nothing else. Okay, they have given profit and loss account, revenue from operation. They have given 2,20,000 fine, we show directly, and cost of material consumed show directly, it is operating expenses. Okay, employee benefit expenses, it is also operating, we will show it. Depreciation, we won't show it in the direct method because it is non-cash and non-operating. In the indirect method, we will add it to the net profit, right? We will add it to the profit. But in the indirect method, and we are taking straight away revenue from operation, we won't consider this transaction. Okay, insurance premium, okay, in operating activity. Then they have given tax, we will minus it from the revenue in the end. Okay, trade receivables they have given, and revenue from operation 2,20,000, and trade receivable, out of this whatever sales we have made, we should receive how much? It is trade receivable, right? Trade receivable 33,000 for the previous year, 33k, and for the current year it is 36,000. Means how much it get increased? 3,000. In the current year 3,000 trade receivable got increased. Means we didn't received money from the debtors. We didn't received money from the debtors. What we will do? Sales we have recorded in the P&L account, from that we will minus this because we didn't receive that 3,000. Fine. Okay, so next, trade payable. Trade payable they have given, and the cost of material consumed. If we purchase on credit basis, we will have trade payables, right? The for the current year, in 2016, previous year 17,000 it was, and in 17 it became 15,000. Means 2,000 we have paid. Cash is going out. From the revenue from operation, we will minus that. But in the 2000 it's there, right? Okay, here cost of materials consumed, it is also expense. 1,20,000 is also expense. Is that correct? This 2,000, what we will do? We have paid that amount. Means here this purchase also we will minus from the revenue from operation, and if we add this 2,000 to that, become totally to 1,22,000, we will minus it. Next, inventory also related to the purchase, right? Now from 2016 to 17, increase is 5,000. Means 5,000 worth of inventory we have purchased. Cash is going out. We will minus it from the revenue from operation. We can add it to the expense, right? Totally we will minus 1,27,000. We can minus. Okay, outstanding employee benefit expenses. Let me write trade receivable, trade payable, employee benefit expenses. What they have given in the P&L? How much? Employee benefit expenses they have given 30,000, right? They have given 30,000. We should obviously minus it from the operating activity. But in that outstanding employee benefit expenses, we didn't pay that amount. Outstanding means we didn't pay to the employees. In the earlier it was 2000, and in 2017 it became 3000. 1000 rupees increment, 1000 rupees increased, right? What we will do that 1000, the 1000 still in our account, right? We have minus it from the revenue from operation. What we should do, but still cash in the bank account, we should add that. Is that correct? Yes. In that, in this expense, instead of adding there, we will minus from the whatever amount we have paid. Both are same, right? Became 29,000. Fine. They have given prepaid insurance, and how much we have paid insurance? 8,000 we have paid. 8,000 we have paid. And prepaid insurance, already we have paid. Advance payment of insurance is current years, 5,000 minus 5,500, 500 rupees for the current year we have paid in advance, means cash is going out. It is already expense, and this is also expense. We just add it, 8,500, the minus figures. Income tax outstanding, income tax outstanding. In the previous year it was 3,000, and in 2017 current year it became 2,000, means 1,000 rupees we have paid, 1,000 rupees we have paid. And in the P&L, how much we have paid? Less income tax is 10,000. Income tax, okay, 10,000 it was. So already paid 10,000 we have already paid. And income tax outstanding, for the current year we have paid 1,000 rupees. We should add it to the expense, became 11,000. Oh, this is plus, right? 1,000 rupees plus here, minus amount plus 1,000, 29,000. Okay, fine. Trade payable 21 lakh 27,000. Fine. Let's do the solution. Profit before tax and extraordinary item, how much? 2 lakh 20,000 revenue from operation, right? 2 lakh 20,000 revenue from operation. Out of that 3,000 is the trade receivable. Still we didn't receive, we will minus that amount. 2 lakh 17,000 revenue from operation. Is that correct? 2 lakh 17,000 is the revenue from operation. Fine. Next, what they have given? Cost of material consumed. Cost of material consumed. Payment to the suppliers. 1,27,000 minus. Okay. Next, employee benefit expenses. Employee benefit expenses. How much it is? Employee benefit expenses 29,000 in negative. 29,000 negative, because it is expense, we will minus it from the revenue from operation. Next, depreciation, non-cash and non-operating. We won't consider it in the direct method, but we will add it in that indirect method to the net profit. We will add in the net profit, but in the direct method there is no entry for this. Okay. Insurance premium. Insurance premium. Insurance premium. How much we have calculated here? 8,500. Negative, we have paid. Cash might have gone out, right? Next, nothing is here. Trade receivable done. Trade payable, inventory is done. Outstanding pay. Okay. Income tax. Outstanding income tax. Okay. Fine. How much it became? Shall I calculate? Just a second. I'll break the calculation. 2,17,000. 2,17,000 minus 1,27,000. Yes, 29,000, 8,500, 52,500 cash generated from operation. 52,500 we have generated, and we should minus tax amount, right? It is 11,000. Cash flow, cash flow from operating activity, right? You write down clearly operating activity it is. Okay, 52,500, right? Minus 11, 41,500, 41,500 cash flow from operating activity. The question is done. You can take down the solution. Next, for the same question, we will do for indirect method. In the method of indirect. Okay, you can take down. Okay. Yes, your revenue from operation, not profit before. Sorry for that, I forgot. Revenue from operation, right? Sorry for that. Now you can take down. Okay, shall we do the indirect method for question 1? Yes, sir. First, they have given revenue from operation. Okay, straight away we should take profit, right? From profit we will start. Profit before tax they have given how much? 42,000, right? There is no had added income tax. There is no dividend and general reserve. Fine. Straight away, profit before tax and extraordinary item, 42,000. Fine. Yes. Then what they have given, what we should take, which is non-cash and non-operating. If there is any non-operating or non-cash, we will add that to the profit, because it reduced our profit in the P&L, so that we will add to arrive at operating profit, right? Depreciation, cost of material consumed, is that operating? Yes. Employee benefit expenses, is that operating? Yes. Depreciation is not operating or cash. We will add it. Depreciation, we will add that. How much it is? 20,000. Fine. Then other expenses, insurance premium. Okay, tax, nothing else. Okay. Trade receivable. Trade receivable. Trade receivable. How much it is? 33,000 in 2016. 33,000 in 2016. Trade receivable. In 2017 it become 36,000. Means from year to year 3,000 increased. Is that correct? That 3,000 we didn't received it from the debtors. What we should do? Straight away we will reduce it. Okay. Trade payable. Trade payable. Fine. 17,000 it was in 2016, and in 2017 year end it become 15,000 means 2,000 we have paid. 2,000 we have paid means cash is going out. Cash is going out 2,000 rupees. Will reduce trade payable, reduce 2,000 because cash is going out from the organization. Inventory 22,000 was in the beginning of the year 2016 it was, and in 2017 in the end of the year it is 27,000 means 5,000 worth of inventory we have purchased again, means cash is out. Cash is out. What we will do, we will reduce. Cash is going out, right? 5,000 inventory, reduce 5,000 because cash is outing. So cash is going out. Outstanding employee benefits. Outstanding employee benefits. We didn't pay it. We didn't pay it means cash is still in the account. Yes, right. 1,000 rupees. We might have reduced from the profit. We will add it. Employee benefit expenses. Employee benefit expenses. I'm writing in short forms. You should not write it in short forms. You should write it in full form. Okay. Expenses. Prepaid insurance. 5,000 it was and it became 5,500. 500 we have paid in advance. We have paid in advance means cash is going out. 500 minus insurance. Okay, then income tax outstanding. Okay, we have paid 2,000. We'll add it in the income tax. Fine. How much it become? Depreciation 42,000. Right, 42,000. Let me take my calci. 42,000 minus we should add the depreciation, right? Because we already minus that, sorry, we should add 20,000. Okay, 62,000 it became minus 3,000. 62,000. 62,000 from this 62,000 cash generated we should find out, right? Cash generated from operation. How much? Okay, minus 2,000, then minus 5,000, then add 1,000 minus 500. It be 52,500. Direct method also we get cash generated from operation the same amount, and we will reduce the tax, that is 11,000. 41,500. Cash flow from operating activity. Yes, in the both method the same answer will come. You know it already. You can take down. Solution is done. We'll go for the full-fledged question, a big one. Yes, shall we go for the full-fledged question from the textbook? Let us see the question. The question is on the board. You can take down the question. Let us read the question first. From the following information, prepare cash flow statement of Pioneer Limited. Okay, they have given balance sheet and notes to accounts. Let us see. Share capital. If share capital, it is in the beginning of the year it was 5 lakh and in the end of the year it is 7 lakh, means share capital We have added 2 lakh for the current year, 2 lakh rupees share capital for the current year, and for that we will pay dividend. Okay. Reserves and surplus in the notes to account, they have given balance in statement of P&L account. Okay, fine. Long term borrowings, trade payable, other current liabilities, short term provisions, tangible assets, intangible, inventories, trade receivable, cash and cash equivalent. Fine. Notes to accounts, dividend have given provision for taxation, equipment, furniture, tangible asset, patent, cash. Okay. During the year equipment costing 80,000 was purchased. They have purchased additional equipment for 80,000. What it is? It is investment activity. 80,000 goes for the investing activity. Okay. Loss on sale of equipment, 5,000 rupees loss. It will be shown in the operating activity. We will add because loss we might have reduced from the profit. Okay, we will add that. Depreciation of rupees 15,000, we will show it in the operating activity. Fine. And 30,000 on furniture, 15,000 on equipment, 30,000 on furniture, right? 30,000 on furniture. Okay, let us start solving the question. First, we'll start with the profit before tax and extraordinary item. Profit before tax and extraordinary item. Right. What is the profit? Okay. This is the question, right? What is the profit they have given in the reserves and surplus? In the reserves and surplus, they have given balance in statement of profit and loss account. Earlier, it was in the beginning of the year, it was 2 lakh. For the current year, 1 lakh 50,000. That is 2 lakh minus, 3 lakh 50,000 minus 2 lakh, 1 lakh 50,000 for the current year. Profit. Oh, it is full-fledged question, right? Okay. Let us calculate here. Okay. This is cash from operating activity. Let me write below. Cash from investing activity. There is no. Right. Okay. Cash from financing activity. We'll categorize the income and expenditure in 3 activities: operating, financing, and investing. Fine, we can calculate here. Okay, we will start with the profit, right? That is profit before tax and profit before tax and extraordinary item, right? Okay, what is the profit they have given? 1 lakh 50,000. That is 2 lakh, current year 3.5 lakh minus 2 lakh is 1 lakh 50,000 for the current year. In that we will add tax, dividend if there is any dividend we will add that, and general reserve they mention. Okay, profit 1 lakh 50,000 is there. Dividend where they will give In the notes to accounts, short-term provisions, proposed dividend and provision for taxation. Proposed dividend and provision for taxation. For the purpose of profit, adding to the profit, to get the correct profit, we will add provision for tax, because we kept aside some profit for the dividend and tax. We will add that tax amount. 50,000 is the tax, 70,000 is the dividend. General reserve they didn't give. Okay, 2,70,000. Profit before tax and extraordinary item, 2,70,000. Fine, so okay. Next. Share capital. Next comes out. We'll see the first item in the balance sheet, share capital, where it goes, financing activity. Is that correct? Share capital, how much it is? 5 lakh minus 7 lakh. For the current year, it is 2 lakh, right? Is that correct? Yes, sir. If we issue shares, we will pay dividend also. We made a provision of provision for dividend 70,000. Is that right? Yes, sir. But how much we have paid? That is proposed dividend 50,000 we have paid. Why, sir? We have made provision for 70,000. One thing. Dividend for the current year. In the current year, how much we will pay? 50,000. Correct. Okay. But we have made a provision for 70,000. If we made a provision for dividend, where we will pay? Let's take 1/4/2016, 31st 3/2017. If we made a provision here for dividend, we will pay it in the next year. Okay. If we made provision in the previous year, we will pay in the current year. Is that correct? Yes, sir. Then how much we might have paid in the opening? Whatever it is in the opening, we might have paid in the current year. 50,000 we might have paid in the current year, not 17,000, not 70,000. We have paid 50,000, where we will show dividend is 50,000 for the current year, whatever we have paid. And tax also same, we will see that. Next item, reserves and surplus. Is that done? Yes. Long term borrowings, bank loan. In 2016, shall I calculate here? In 2016, it was 1 lakh, and in 2017 it became 50,000. Means we have paid 50,000 of loan. Is that correct? Where it will appear in the financing activity. Bank loan repayment. We have paid 50,000 rupees, cash went out. Next, trade payable, where it comes in the operating activity, right? Trade payable. Okay, how much it is? It was 50,000 in the beginning of the year, and in the end of the year it is 45,000. Means 5,000 we have paid. Cash went out. Is that correct? Okay, sir. Next, other current liabilities. Outstanding rent. It was 5,000 in the beginning of the year, and it became 7,000 in the end of the year. Outstanding means we didn't paid yet. Okay. But if we didn't pay, the cash is in the bank account. We might have reduced in the P&L account. We should add it back. Is that correct? Yes. We minus that. What it is? outstanding rent, outstanding rent. Okay, how much it is? 5, sorry, 2000 we will add. Okay sir. Next, short term provision, done. Tangible assets, they have given notes to accounts. 4, fixed assets, equipment is there, equipment is there. In opening it was 2 lakh and in the closing 2 lakh 30,000, and we have purchased 80,000 equipment, worth of equipment 80,000 in the investing activity we show. Okay, equipment we have purchased in the current year, right? We will show first year 80,000 and then we will calculate. Fine. Shall we do equipment account? Equipment account, we'll get to know better. Okay, okay. How much it is? How much? 2,30,000. Let me write the format first. Okay, it is asset account, right? It is asset account. What will be the, where will go the opening balance? The opening balance will go to the debit side. It is 2 lakh in the opening and 2 lakh 2,30,000 closing. Okay, we have purchased 80,000 worth of equipment. 80,000 we have purchased, it goes to the equipment investment account. Okay, it went. Fine. Next, loss on sale of equipment, we have loss 5,000 rupees. And next, depreciation we have 15,000 rupees. What will be the remaining amount? Remaining amount will be cash 2,80,000 minus 2,30,000, it will be 50,000. 50,000 minus 20,000, 30,000 is the remaining cash. Is that correct? What we will do? 5,000 cash. First, 5,000 is the loss in our, we will show, we will add it in the loss on sale of equipment, because by this our profit might have reduced. It is not our operating activity. 5,000 we will add. Is that correct? Is that correct? Next, where this 30,000 will go to the same profit on sale of equipment. If we receive cash, we might have sold some equipment on profit. Okay, fine. And depreciation is there. Depreciation, we will add depreciation 15,000 for the equipment, and for the furniture they have given 30,000 depreciation. No, we didn't purchase any furniture in the current year. We are straight away depreciation, showing the depreciation 45,000 total depreciation. Okay, fine. The tangible asset is then intangible asset. Intangible asset 1 lakh, it was patent. Where in the notes to accounts they have given patent 1 lakh in the beginning of the year. In the end of the year it is 95,000. It is 95,000. The 5,000 of patent we might have sold, we might have received cash. Okay, sale of patent, or just write patent. Okay, 5,000 patent, write off it is. Okay, fine, you can write the patent. Okay, next, what we have? Intangible asset is that non-current investment. We have non-current investment. Next item is non-current investment. How much it is? 6 lakhs for the current year. Okay, fine. Next item, inventories. Inventories. Inventory, what happened? Inventory in the opening it was 50,000 and in the closing it is 1 lakh 30,000. Means 80,000 worth of inventory we might have purchased. Cash is going out. Inventories 80,000 minus, right, patent we added, depreciation, equipment, okay, equipment, profit, no, current investment, okay, share capital, okay, fine, everything is correct. Okay, cash from investing activity all is done. Next, trade receivable. Trade receivable, how much it is? It is in the opening it was 80,000 and in the end of the year 1 lakh 20,000. That means 40,000 which still didn't received. What we will do, we will minus that trade receivable. How much it is? 40,000, right? 1 lakh 20,000 minus 80,000. 40,000 we didn't receive in the current year. Fine. Next, cash and cash equivalent. Anything else? Did we miss anything? Yes. Shall we calculate? Cash from operating activity. Cash from operating activity. How much? Shall I take my calcium? Yes. 2,70,000 plus 5,000 plus 45,000. What it is? Depreciation we will add. Patent 5,000 we should add. Okay. Then trade payable minus. Next 2,000 we should add. 2,70,000 plus 5,000 plus 45,000. Okay, 5,000 again, and we will minus 5,000. 2,000 add. Next 80,000 minus 40,000 minus 2 lakh 2,000. Cash generated from operation 2 lakh 2,000. Yes. Next we have tax, right? How much? Provision for tax 30,000. 30,000 we have paid. Tax 30,000. If we minus 1,72,000, 1,72,000 cash from operating activity. Cash flow from operating activity. Fine. Next, cash from investing activity. How much? Cash from investing activity will be in the minus because 80,000 6,50,000. You write it down. I'm not able to write that. Okay, 6,50,000. Keep it in mind that cash from financing activity. Cash from financing activity. 2 lakh, 1 lakh it is. Okay. Net increase or decrease in cash and cash equivalent. Right, we should add these three. Okay, 1,72,000. Non-current investment is 1 lakh, not 6 lakhs. Got confused. Seeing some amount. It is 1.5 lakh. 1.5 lakh. Sorry for that. Okay, okay, fine. 1,50,000. Okay, 1,72,000 minus 1,50,000. 1,72 minus 1,50, 22,000 plus 1 lakh. 1,22,000. 1,22,000. And if we add opening cash and cash equivalent, how much is the opening cash and cash equivalent? It is 2,05,000. Okay, 1,22,000 plus 2,05,000, 3,27,000. 3,27,000. Is that equal to closing cash and cash equivalent? Cash and cash, yes, it is equal. Closing cash and cash equivalent. 3,27,000. The question is done. You can take down the solution. Next question is, let's go for the next question. Question is on the board. You can take down the question. Shall we read the question? Yes. From the following balance sheet, Xerox Limited prepare cash flow statement. Okay. They have given share capital, reserves and surplus, long-term borrowings, trade payable, short-term borrowings, fixed assets, current assets, notes to accounts. Okay, straight away we will go for the additional information what they have given. Dividend proposed and paid during the year, 1,50,000 they have paid the dividend. Okay. Income tax paid during the year includes whatever income tax they have paid, it includes 15,000 on account of dividend tax. Fine. Okay. Land and building book value of 1,50,000 was sold at a profit of 10%. Okay. The rate of depreciation on plant and machinery is 10%. Okay. Shall we solve this question? Yes. First, what we will do, we will identify the net profit profit before tax and extraordinary item. Right. Okay. Shall we calculate here? Profit. How much they have given? How much? Reserves and surplus. In the reserves and surplus directly they have given balance in statement of P&L account, means 6 lakhs in the opening, 7,50,000 in the end. 1,50,000. 6 lakhs minus 7,50,000 is 1,50,000 is the profit for the current year. Okay. Next, what we will add? We will add a dividend, 1,50,000. Is that correct? Yes. 1,50,000 is the dividend. And next, there is any general reserve? No. Next, tax. How much tax is there? Taxation, 95,000. Provision for tax, 95,000 is the provision for tax. How much it became? 3,95,000. 3,95,000 Profit before tax and extraordinary item 3,95,000. Then next, the first item in the balance sheet, share capital, where it goes the financing activity. Share capital 5 lakh, that is 10 lakh minus 15 lakh becomes 5 lakh. Okay, we have paid proposed dividend, whatever the proposed dividend was there, we have paid that 1,50,000 we have paid dividend. 1,50,000 we have paid. Okay, in that 15,000 dividend tax also we have paid. 15,000 dividend tax also we have paid. Dividend tax 15,000 we have paid. Okay, 1,65,000 it become 1,65,000. Okay, right. Next item, reserves and surplus, done. Long-term borrowings. Long-term borrowings, they have given notes to accounts. In the notes to accounts, debenture, whatever debenture in the opening, it's they are redeeming that debenture and taking a new bank loan of rupees 1 lakh. Okay, redemption of debenture is 2 lakh. Okay, dividend tax paid, dividend paid in the negative. Okay, and there is a new bank loan for 1 lakh positive because cash is coming in. Fine, the long term borrowings also done. Trade payable in the opening it was 1,10,000, in the closing it is 1 lakh, means 10,000 we have paid. 10,000 we have paid. Trade payable 10,000 we have paid. Okay, short term provisions, provision for taxation, it is 95,000. Okay, income tax paid during the year includes 15,000. Whatever 80,000 we have paid, if it is 80,000 in the beginning, that amount only we will pay in the current year. Okay, out of 80,000 it is 15,000 includes the tax. Okay, I will reduce that later, we will calculate that. Okay, then non-current assets, tangible assets, they have given the notes to account. Land and a building, it was 8 lakh in the 2016 and it become 6 lakhs 50,000, means in the additional information they have given land and building book value of 1 lakh 50,000 was sold, means where we will record it, sale of land, the investing activity, right? 1,50,000. And at a profit they have given, at a profit 10%, at a profit of 10%, it is 15,000 profit on sale. 15,000, this 15,000 whatever profit we get, we might have added in the profit, right? We should minus it. Loss on sale, sorry, profit on sale of what it is, land, right? 15,000 we will less. Okay, the rate of depreciation on plant and machinery. Okay, one second. Tangible asset is land and building is done. Plant and machinery, it was 4 lakh. Nothing we have purchased, we show depreciation, we will show depreciation, we will add depreciation 40,000, we will add that. Next we have non-current investment, it is 6 lakhs. Non-current investment, it is 6 lakhs. Non-current investment, non-current investment. This 6 lakhs is correct in the previous, so some I have written this only by seeing this question. Okay, done sir. Next we have inventories 80,000 increase. What we will do? Inventory, if I said increased, minus, because we might have purchased for 80,000 of inventory, worth of inventory, cash is going out, right? Next, trade receivable. Trade receivable, how much it is? 1,50,000 in the beginning, it became 2 lakh, means again 50,000 we didn't received. We will minus it because we might have had it, so we might have showed in the profits, right? Next, cash and cash equivalent. Okay, dividend proposed. Okay, let's see this, calculate and see. Tax 80,000 it was, and out of that 15,000 is the dividend tax. It is 65,000. We'll get minus here. Remaining we will show it here. Okay, in the fixed asset we have missed one thing: intangible assets, goodwill, right? 20,000 written off. 20,000 written off. What we will do? What we will do? It might have increased, sorry, decreased the profit. Goodwill, we will add it back. Written off. In the P&L, we might have written off the goodwill. We will add it back. Shall we calculate? Yes, 3,95,000 minus 15,000, then add 40,000, add again 20,000, minus 10,000, again minus 80,000, minus 50,000. Cash generated from operating activity 3 lakh it is. From that 3 lakh we will minus 65,000 of tax. It will be 2 lakh 35,000. 2 lakh 35,000 is the cash flow from operating, sorry, you write it in full, activity. We consider it as A, right? Okay. Investing activity 6 lakhs, 1,50,000 plus 15,000, 1,65,000, 1,65,000 minus 6 lakhs, 4,35,000 minus 4,35,000. You write it clearly. Minus 4,30,000 is the investing activity total. Okay. Then 5 lakh plus 1,65,000 plus, sorry, 5 lakh minus 1,65,000 minus again 2 lakh, had 1 lakh rupees, 2,35,000. Cash from financing activity. Cash from financing activity. Okay. Shall we calculate? Okay. Net increase cash flow. Net increase in cash flow. How much it is? 3 lakh. Okay, 4,35,000 minus investing activity plus 2,35,000. Net increase in cash flow, it is 35,000 comes out. And opening cash and cash equivalent, how much it is? Opening cash and cash equivalent 3,40,000. 3,40,000. And if we total, it should match with the closing cash and cash equivalent 3,75,000. Is that matching with the closing? Yes, it's matching. The question is done. You can take down the question. Let us start with the another question. This is your last question, and your cash flow statement is done. Yeah, except these questions the examiner not gonna ask more than this, I think so. If you want, you can do one or two small questions, or how many want, how many of you want, you can do the small questions. If you still have any doubts, you can text me through WhatsApp, Instagram. Let's start the question. Yes, the question looks lengthy. The question is on board. You can take down the question. You can take down the question. Okay, let us read the question. Let us read the question. Okay, sir. From the following information of Oswald Mills Limited, prepare cash flow statement. We are gonna prepare this through indirect method. Fine, they have given balance sheet and statement of profit and loss and some two adjustments. Let us start with the balance sheet. Equity and liabilities. Under that, shareholders fund is there, current liability is there. Okay, in the share capital they have given notes to account what it is. In the share capital, equity share capital is, in the beginning of the year it was 1000, and in the end of the year also it is same, no changes at all. But in the 10% preference share capital, beginning it was 400, in the end it is 300. What it means, we we redeemed 100 debentures, sorry, 100 rupees worth of debentures. They are given in the lakhs. We gonna do with these thousands and hundred only. We can consider these as thousands, not as lakhs. Okay, okay, they are given in the lakhs, but we gonna consider it as thousands and hundreds. That's it, right? Okay, fine, sir. Okay, preference, we have sold rupees worth of 100 rupees preference share. We have sold, sorry, redeemed, not sold. Okay, next, reserves and surplus is there, that means profit. Okay, profit they have given. And the current liability, under current liability, short term borrowings and trade payables they have given. And in the assets, non current asset, current asset, fixed assets they have given some notes what it is. Fixed asset, tangible assets, opening is 3400 and closing is 3600, and there is accumulated depreciation, opening 1000, closing 1200. Fine, sir. Next, inventories, trade receivable, cash and cash equivalent, short term loans and advances. Okay, fine. Next, shall we read the P&L? First, revenue from operation they have given 2800. Fine. Other income, dividend income is there 1000. Okay, fine. Total revenue is 3800. Next, expenses they have given cost of material consumed, that is your purchase, employees benefit expenses. Okay, finance cost, interest paid. Okay, depreciation, loss due to earthquake. Okay, loss due to earthquake. What it is for us, it is an abnormal loss. It doesn't happen frequently in the business like normal losses, right? It is an abnormal loss. What is the treatment in the cash flow statement? We will consider it as profit before tax and extraordinary item. That extraordinary item is this abnormal loss. Okay, we will add it there in the profit, because the profit gets reduced because of this loss. Profit gets reduced because of this loss. Fine. Okay, so then what we will do, that we will add it there, and after tax we will reduce it. After tax we will reduce it. Fine. Okay sir, we'll see that. Then profit before tax, tax paid, profit after tax. Okay, fine. Some adjustments they have given, what it is. No dividend, they are not paying any dividend. They are not paying any dividend, but they are receiving dividend. Fine. Okay, fine, sir. Next, out of fixed assets, whatever fixed assets they have given, tangible assets, out of that land worth of rupees and sorry 1,000 lakhs having no accumulated depreciation. The land is, obviously the land won't get any depreciation, it is appreciating asset. Fine, there is no depreciation, and sold for no profit no loss, means they have sold for 1,000 lakhs itself. Okay, we will consider it as 1,000 rupees. Fine, so let us start the solution. Indirect method. From where we will start? From where we will start? Let me open the cap. Yeah. Okay. Cash flow statement, indirect method. Cash from operating activity. Cash from operating activity. Let's see the first one. Profit before tax. Profit before tax. Profit before tax and extraordinary item. Okay, fine. Let us calculate the profit. Before that, let me investing activities, that okay, let me write here itself. Cash from investing activity. Okay, cash from financing activity. And I need some space to calculate everything, right? We'll calculate here. Let's see if there is any spaces. Okay, let us start the question. From where we will start? From profit, sir, because it is indirect method. Profit, how much they have given? Profit before tax only we can take. If they didn't give it before tax, you will take the profit and you will add the tax. That's it, nothing more. Profit before tax 1,700, it is 1,700. Okay, fine sir, fine. Then what we will add to this? Extraordinary item. Extraordinary item, this is, sorry, it is earthquake. Loss due to earthquake, right? Loss due to, let me write, loss due to earthquake. Is that okay? Yes sir. EQ is earthquake. Okay, 1,100, right? 1,100, it become 2,800. Profit before tax and extraordinary item 2,800. Is that okay? Okay, so next item. What next? We will add the non-operating and non-cash items. Okay, fine. In the P&L, let's start from the P&L. In the P&L, they have given revenue from operation. Is that operating? Yes. Other income. Other income, they have given dividend. They have given dividend for this income. Earlier in the starting I said, if we receive dividend, it will be investing activity and we will add to the profits, right? Here we will show. Okay sir, fine. But there is another treatment. What it is, we will show it in the operating activity itself, that is in the profit. Already it is added to the profit. We won't do anything. If it doesn't get added, we will add that. If they didn't add, you will add that, because they have added to the profit and loss, sorry, profit. We won't add that. It is already added to that 2800, right? Okay, this is the second treatment. You can treat either way. You can minus here, you can minus in the operating activity and show it in the, you will add it in the investing activity. If not, nothing you will do. Simply it is already included in the profit, leave that. Fine, you will write a note, it is added in the profit, that's it. Fine sir. Next, expenses. Cost of material consumed, is that operating? Yes, leave. Employee benefit expenses, is that operating? Yes, obviously. Finance cost, is that operating? No. Interest paying is not your business, right? We will, what we will do, add back to the profit interest paid 200, add back, then it is finance cost, right? Sorry, it is finance cost. From here we will minus interest. How much it is? 200 minus, that's it. Then next, depreciation, add it back because it's non-cash. Depreciation 200, add it back. Okay, fine. Nothing more in the P&L. Let's see the balance sheet. First thing is share capital. In the share capital, what they have given in the notes to accounts, equity share capital, that is no, not increased and not decreased also. We will leave that because no changes, no inflow, no outflow. What we will do? Nothing. 10% preference share capital. 400 it was in the opening and it is 300 in the closing. Means we have redeemed 100 rupees worth of preference share. 10% redemption of redemption of 10% preference share capital. How much we have paid? 100 we have paid, right? Cash is going out of the company. Next, surplus profit is already over. Next, short term borrowings. It was 600 in the opening and in the closing it is 200. Means 400 short term loans we have paid. Short term loan paid. If we pay, cash is going out of the company, less 400. Is that correct? Yes sir. Then trade payable, where we will show in the operating. What they have given, trade payable. It was 400 in the beginning and it became 500 in the end of the year. Means 100 got increased, means we didn't pay, right? The cash is still in the account. We should add it. Trade payable 100. Next, what? Fixed asset. We are going to fixed asset. They have given some notes to accounts. Okay, fixed asset, tangible assets. They have given opening 3400, closing 3600, accumulated depreciation 1000, 2000, sorry, 1200. Okay, let's see accumulated depreciation. Earlier, in the opening it was 1000 and in the closing it is 1200. Means the 200 depreciation for the current year that we had it here. Okay, fine. In the fixed asset related to that, they have given some additional information. They have sold some 100 lakh worth of land. Okay, shall we do one account? Shall we do an account? Fixed asset account. Fixed asset account. You can understand it better, right? Okay. If it is asset account where the opening balance comes, where we will show in the debit, right? Balance brought down. Opening balance is how much? 3400. Closing balance by balance carried on. It is 3600. Is that visible? So, okay. They have sold some land by sale for 1000, for 1000. This sale we will show it in the investing activity. Of land Sale of land 100. We might have received, we should add it. Okay, opening minus closing. Fine. Then if we total it, it comes out 4600 minus 3400, the 1200. Debit balance is there. What it is they have might have purchased, right? They might have purchased to cash. In the bracket we will write purchase. Okay, 1200 purchase means purchase of fixed asset 1200 negative, 1200 negative. Then nothing else. Fixed asset get over. Next, non-current investment. Opening 200, closing 300 means we have purchased some 100 rupees worth of investment. Cash may went out. What it is? Non-current investment, right? Non-current investment. Non-current investment. Cash may went out of the company. We'll minus that. Okay, fine. Next, current asset. Inventories. Opening 1300, closing 1200. It means we have sold some inventories. We have sold some inventory for 100 rupees. Cash might have received inventory. Add 100, right? Cash might have received. Trade receivable 900, it was 800 in the end. Okay, we have received 100, right? If it is 900 and became 800, it means we have received 100, right? Trade receivable 100. Cash and cash equivalent short term loans and advances. No changes in the short term loans and advances. No need to take that. Okay. Okay. Shall we finish this? Shall we finish this? Let me take my calci. Yes. Okay. How much it is? Cash from operating activity. Cash generated from operating activity. Operating activity. How much? Oh, 2800, 3000, 3200, 3500 we have generated. Out of this we will minus the tax. How much tax is there? How much tax is there? Let me see. Let me have the textbook itself. Okay. Tax they have paid 1000 rupees they have paid. We will minus that. Cash from sorry cash from operating activity, it is 2500. Is that correct? Next loss, right? We have a loss due to earthquake, sorry, earthquake, due to earthquake. How much it is? 1100, right? We will minus that 1400. Net cash flow from operating activity. Net cash flow from operating activity. Fine. Next we have sale of land, sorry, cash from investing activity. 1000 minus 1200, 300 negative. Cash flow from investing activity. Cash flow from investing activity. Next we have financing activity, right? Okay, 700 in the negative. This is cash flow from financing activity. Okay, then net cash increase or decrease. Net cash or cash equivalent increase or decrease. Let us check that. Increased or decreased. Okay, 1400 minus 300 minus 700. Net cash increase or decrease is 400. Net cash increased. Net cash increase from these activities 400. Then we will add opening cash and cash equivalent. Cash and cash equivalent. I'm not able to write that. Okay, net cash, sorry, opening cash and cash equivalent. How much it is? How much they have given? 800. It must be equal to closing cash and cash equivalent, right? Closing cash and, I'm writing in short form, closing cash and cash equivalent 1200. It comes if we add both. 1200, is that equal to cash and cash equivalent of closing balance? Yes, it is. The question is done. You can take down, and with this question we are winding up this chapter. If you get this question in the examination, you might get for 14 marks or a small question for 6 marks. You can easily do that. You can practice one or two questions more if you want, and if there is any doubt, you can text me on WhatsApp or Instagram. Until then, let's wind up